Hi, I'm Hubert Centers. Welcome to Absolute Wealth's weekly edition of Centers Strategies. Let's take a look at this week's strategy. In this week's strategy, we are going to focus on how to determine if a market is trending or if it's choppy and sideways. And we're only going to trade when a market is trending in order to increase our odds of making money and decrease our odds of losing money. So the indicator that we're going to use is almost on every charting platform out there. It's called, let me grab my pen as I'm writing here and I'll write it out for you. It's the ADX, and it just stands for Average Directional Index. And the easiest definition that I can give you is it tells you whether the market is trending, and that's what it tells you. It tells you if it's either trending or if it's choppy. Okay, now you want to avoid the chop. The chop is not good for your account. It will grind your account to dust and make your broker richer and put your broker's kids through college, but it really won't make you any money. So we only want to actually trade in a trending environment. So let's grab the ADX. It's really easy to apply. I'm going to right click. I'm going to insert analysis technique. And then I'm going to grab the ADX and prompt for format is selected. And I will make sure it's a 14 period. That's the look back. And now we've got this nice yellow line down below the price action. Now, the next thing that we're going to add is we're going to add a line. All right. This is the way I use it, and I'm going to recommend that you use it too. It's the easiest way to use it. So what you're going to do is you're going to place your horizontal line at 20, all right? And on Trade Station, make it a little bit easier so I don't have to just move it so much. I'm just going to go 20.00 and hit enter. And now we've got a line at 20. So here's how you use this standard indicator that's going to be on almost every charting application out there, all right? The rule is super easy to remember, so that you don't have to worry about any complicated formulas. All you want to know is anytime the ADX is greater than or equal to 20, it means the market is trending, all right? TREND. Anytime the ADX is less than or equal to below 20, it means it's a non-trending market, all right? So let's go through a couple of instruments here. This one is a daily chart of the S&P 500, the E-mini. And as you can see, this is the portion of time that it's below 20, all right? So anytime it's below this white line, this means it's 20, 20.00, and that means it's a non-trending environment. So what it's doing is about from here to about in here, it's more sideways than it is trending either to the high side or to the low side. Now, one thing I need to be crystal clear with you on. Anytime it's above 20, that does not mean that the market is going to be trending up, all right? It just means it's going to be trending in one direction or the other, either the up direction or the down direction. So as you can see here, it's above 20 and the market is trending up, so we can trade. Now, here the ADX is also above 20 and the S&P is selling off, but it's trending, all right? So it doesn't give you the direction, it just tells you that it's trending and it's safe to trade. Now that we've got that on top of the price action, we now have the ADX, there's another way that you can use it, which is good for timing, but not always good for direction. So it's super simple. All you're going to do is you are now going to add a 40 to the ADX, all right? So this will be about a 40, 39.82, and this is another way that you can use it for 0.00. So now you know that this market is trending when it's above 20, and you can see here we're going to walk through it. It's above 20, it's trending, and then boom, once it gets above 40 and drops below 40, it's telling you that the potential trend is over because it's going to go from the 40 line back to the 20 line. All right, but the main thing is if it's above 20, it's trending. If it's below 20, it is a non-trending environment and you don't want to trade. So now that we've got that straight, let's take a look at a few markets and see where they're at. All right, so this is the S&P. The S&P is it's above 20, but it is falling from 40 to 20, so it's getting a little bit more choppy. Let's take a look at Google, G-O-O-G, really quick here. And I'm just going to use the 20 line here on Google and see where Google is. That's good enough for government work. You can see that Google has dropped slightly below 20, so it's in a non-trending environment. So we're going to leave Apple alone, A-A-P-L. And this is a good way to kind of filter out through the markets to tell whether you should be messing with it or not. Obviously, you can see Apple is at 1207. It's in a non-trending environment, so you're going to leave that alone. Let's take a look at Netflix in... Okay, wrong symbol. Let me type it in there. All right, so here we've got a chart of Netflix on a daily, and this will work on a lot of different time frames, all the way down to a 5-minute and all the way up to a monthly chart. The preferred time frame that I like to use it on is a daily for swing trading. You can obviously see that Netflix is above 20. It's actually rising, so this trend on Netflix is probably going to continue to the downside. So you're safe to trade Netflix as long as you know that it's trending, and it looks like it's trending to the downside, so you might want to short some Netflix. Now let's take a look at Bank of America. That's been in the news lately. Bank of America is almost below 20, so you can see that that's potentially getting ready to go in that sideways slop and chop. So remember, anytime that you don't know where the market is, if it's either trending or non-trending, apply the ADX, the average directional index. If it's above 20, you're good to go. You're probably in a trend. If it's below 20, it's choppy and sloppy, and don't trade. Good luck, hope it helps, and I'll see you next week.